Hey, what's up, guys? This is Marvin coming to you from StockMarketPlan.com. Wanted to do a real quick video today on one of the most talked about stocks of the past decade, that in Apple. Today, Apple is announcing earnings after the close. When the bell rings, they'll announce, or shortly thereafter. I want to talk about the story behind Apple as far as stock price is concerned. This is what you're looking at in front of you right now. Now you only have as back as September of last year, roughly, and each bar there representing a day. Okay, so each of one of these bars from here to here, that's a day. The high of the day, the low of the day, and so on. Okay, now as you can see, Apple is still acting very, very strong. Okay, there's nothing about this chart that says the stock wants to go lower. Other than that, it is a little bit. Other than that is a little bit extended, yes, for sure. But still, we've got support here with the 20-day moving average, then here with the 50-day moving average, and then down here with the 200-day moving average. Now, why am I interested in this stock chart of Apple? Well, in order for me to expand on that a little bit, I'm going to go back to a story when I was a financial advisor. I remember I just started out, and there was a conversation in a couple of doors down, and basically the conversation between a client and an advisor, and the client was interested in Google, and at that juncture Google was kind of like the same scenario, skyrocketing, super growth rate, and justifiable too. I mean, they had the numbers to back it up, and the conversation basically was the client, the investor, trying to convince the advisor that they should remain in this stock. And the thing that was funny was that the actual client was up like 25-30% already on this Google, and they wanted to add on. And the response that the advisor gave, which is really a lot of times it's really what you get, okay, from the help out there is, well, it's just really high, and I don't think we should buy it because of that. You're crazy. It's just way too high. Can't go higher. Folks, I'm here to tell you the number one thing that you should learn especially when you're dealing with stocks, individual stocks, is just because a stock is up, I don't care what percent. Like here, you've in the past 5 years, Apple's probably been up like, I don't know, 300 and something percent. It does not mean that it cannot go higher. And I would tell you the same thing with a stock that is down 200% in the past 5 years. It does not mean that it can't go lower. So with that said, with that mindset, I want to go ahead and turn to the chart now and show you, number one, this growth that I speak of. And to do that, now I've turned to a weekly chart. In other words, each bar here representing 1 week's worth of trading, okay? And I did this just in an effort to get the whole period that I'm talking about, back to 07. And actually, it's up higher 10 years or, from a 10-year span and beyond. But I just want to show you the most recent move in the stock. And if we go back here, this is 2008, okay? $96 roughly, okay, the stock. Here we are today at $422.90. You figure out that percentage. Like I said, 300-something% higher. Who's counting, right? So here's the thing. A lot of you out there own this stock from $230, $100, $370. Okay, so in other words, you have a very, very sizable gain, and these are the people that I want to talk to today. All of you out there with a sizable gain, 100, 200, okay, and beyond percent on this stock. First of all, let me congratulate you. Let me just congratulate you for having this type of appreciation. Okay, it doesn't come easy, especially in the environment that we've been in the last 10 years. So you've got this huge gain. Okay, now like I said earlier in the conversation, they report earnings today, and there is, so much news about this today, and I'm speaking to you again, the ones with a lot of gain in the stock. Okay, pat yourselves in the back and relax. Okay, relax. Don't pay attention to what everybody's saying. Okay, you have a sizable gain. Let me show you a way that I would handle it. You have to decide for yourself. But if I had a sizable gain on a stock like this, like that one individual on Google, and by the way, the Google ended up going higher, okay? And I remember calling my friends like, "You're not going to believe this, and it went higher, okay? And it is what it is. Stocks that go high growth rates can go higher. Just like just like stocks that go down because they have a reason to go down, they will go lower. Okay, so back to Apple here. I'm going to go back to a daily chart real quick. Here I am to the daily chart. Okay, same period that '08 till now, basically. Okay, so here's that major climb on the stock, right? So you own the stock over here. Okay, massive gains. Good for you. Now let's look at where the stock is right now. Okay. And here we are now. Now I'm just closing up on the stock. Okay, back on the daily chart, each one representing a day. Okay, this is technical analysis, and this is why it can be a good thing. If you're just going by opinion, okay, oh, my advisor told me it can't go higher, or my advisor told me it can't go any lower. Well, why? Why are they saying that? Well, because it's seen a nice run. Can it see a bigger run? Can it see a bigger loss? Okay, that's not a good enough reason why, and that's why sometimes it's smart to turn to technicals. Here's the stock, right, trading at near all-time highs. Okay, here's the high, all-time high right here, $431.37. I mean, we're at $422. That's nothing. Okay, so it's extended. Okay, and I bet you there's a lot of conversations going on today. Oh, I think we should sell because it's extended and it's due for a pullback. Okay, might be true. Well, and the other thing might be true, that is, you know what? It's cheap. Valuations are low. I think it's going to go higher. Well, I'm not saying take either side. I'm saying if you have a sizable gain, again, going back to you with a sizable gain in this thing, in excess of 100, 200%, okay? Give yourself a chance to let this thing bounce off the 20, bounce off the 50, bounce off the 200. Because when I back out of this chart, guys, okay, talking about you, if you're in from here, $200, you're in from here, okay, $300. Do you think you can give up this much just to give yourself a chance to go higher, just like the stock has done here? Here, there's a bounce off the 200, bounce off the 200, okay, right there. Bounce off the 200, bounce off the 200, bounce off the 200. You get my point? Give yourself a chance, okay? Pat yourself on the back. It's a good thing that you have a sizable gain. And now you have muscle. You can actually be patient. Yeah, I'll give up this much percentage to gain more, okay, with a chance of gaining more. Now, that's for you to decide. You know what they say, bulls make money, bears make money, pigs get slaughtered. Well, it doesn't have to be all or none. Maybe you have 1,000 shares of Apple, okay? Sell 500 of it. Sell half when it gets to, let me zoom back in here. If it crosses down to 20. And so on. Maybe sell more down here. Maybe sell more down here. But you have an average higher price as you're coming down and selling off. Okay, this is a growth story, growth stock. One of the most one of the strongest stocks that has hit this market in the last 10 years, if not the strongest, by earnings ratio. And the earnings are still good on Apple. I mean, it's got an earnings rate of 60%, return on equity of like 40%. Okay, it's still heavily owned by institutions, so the big money players are still involved. Okay, I'm looking at my notes here. So, I mean, things are still clicking. There's nothing for this stock. Now, I'm not saying the stock goes higher. I'm not saying the stock goes lower. But for those of you with a sizable gain, you've got muscle, you've got space. Okay, so you don't make 300%. So you make 200. Well, that's something for you to decide. What are you comfortable with? Because you know what? After today, I would hate for the bell to ring and this thing go up another 10% and you missed out on it. Okay, just because they told you it was too high. Okay, so just a little bit of food for thought. I'll let you decide. Remember, it doesn't have to be all or none. You can sell half, you can sell a quarter, and as this thing starts to trade down and crossing these critical levels, and maybe definitely be totally out, under the 200-day moving average, probably. That's what I would do. But I'll let you decide. It's always your decision. I just figured, I remember that story with Google, and I said, you know what? Let me get on the tube and tell this story. And I mean, Google was, going back to then, it was just crazy. I mean, it was massive gains, and it still went up another 10-15%. Anyways, I hope this helps and doesn't confuse you, but, love to hear your comments on the video, anything that you guys see that you like or you want to comment on or don't like, either way. make sure you comment on the video, and I'll be more than happy to address those and get back with you. You can find us on stockmarketplan.com. You can also find us on Twitter under Stock Market Plan, and on Facebook, Stock Market Plan, 3 words. Okay, guys, thanks a lot for watching. Good luck today.